Hey everyone, and welcome back to our series where we dive deep into India's top mutual funds. In this episode, we're shining a light on the HDFC Midcap Fund. This fund follows a stock-specific, bottom-up approach, focusing on high-quality companies at reasonable valuations with a long-term orientation and disciplined investment strategy. You can explore our previous videos by clicking the info button, where we've covered mutual fund schemes from AMCs like Axis, Motilal Oswal, Quant, DSP, and many more. In this video, we'll break down everything you need to know, including the fund's basic details, investment strategy, portfolio mix by market cap, top holdings and sectors, fund manager insights, investment details, historical returns, and taxation structure on your earnings from the HDFC Midcap Fund. Let's start with the fund analysis. But first, a quick introduction to PA Wealth. We're an investment services group offering stocks PMS, mutual funds, alternative investment funds, insurance, startup investments, raising funds via SME IPOs and bond markets, and assisting investors for Dubai real estate investments. We upload research videos on different companies, mutual funds, and financial topics every week. Subscribe to our channel and hit the bell icon to stay updated on the latest market trends and potential multi-bagger stocks. Let's move on to the basic details. This scheme was launched on the 7th of May 2007 and currently manages assets worth around 84,000 crores. Now, let's take a look at the investment strategy. The fund predominantly invests in mid-cap companies with prudent diversification across stocks and sectors. It aims to identify financially strong businesses with sustainable models and reasonable growth prospects. Let's move on to the portfolio mix by market cap. The HDFC Midcap Fund invests predominantly in mid-cap stocks, which make up about 57.7% of its portfolio. Large-cap stocks account for 13.1%, small-cap stocks make up 22.8%, and the remaining 6.4% is allocated to other holdings and cash equivalents. This balanced allocation helps the fund capture growth potential from mid and small caps while maintaining stability through large-cap exposure. Now, let's take a look at the top 10 holdings of the fund. The top holdings include Max Financial Services, Balkrishna Industries, Indian Bank, Fortis Healthcare, AU Small Finance Bank, Coforge, Federal Bank, HPCL, Glenmark Pharmaceuticals, and IPCA Laboratories. These companies represent a mix of financial, industrial, healthcare, and IT businesses, contributing to a well-diversified and growth-oriented portfolio. Next, let's look at the top 10 sector exposures. The fund's top sector allocations are banks at 13.36%, pharmaceuticals at 9.37%, IT, software at 9.08%, tires at 6.23%, and FMCG at 5.06%. Other key sectors include miscellaneous at 4.76%, finance at 3.77%, healthcare at 3.18%, refineries at 2.90%, and auto ancillaries at 2.85%. This broad sector spread helps reduce concentration risk and ensures participation across multiple growth areas of the economy. Now, let's take a look at the fund manager. The HDFC Midcap Fund is managed by Chirag Setalwad, who brings over 22 years of experience in fund management, equity research, and investment banking. Before joining HDFC AMC, he worked with New Vernon Advisory Services, HDFC AMC, and ING Barings NV. His disciplined investment style and focus on quality companies have been instrumental in the fund's long-term success. Let's move on to the investment details. The minimum investment required for a lump sum is 100 rupees, while the minimum SIP amount is just 100 rupees. There's no lock-in period, but an exit load of 1% applies if redeemed within 12 months from the date of allotment. After 12 months, no exit load is charged. Now let's look at the returns generated by the fund. In the last 6 months, the HDFC Midcap Fund delivered a return of 13% compared to 12.32% by its benchmark, the Nifty Midcap 150 TRI. Over 1 year, the fund generated 2.89%, while the benchmark returned negative 0.86%. For the 2-year period, the fund delivered 22.01%, outperforming the benchmark's 20.47%. And over 3 years, it achieved a strong return of 26.24% versus 23.97% by the benchmark. This consistent outperformance highlights the fund's quality-driven and disciplined investment approach. Now, let's take a look at the taxation structure. Capital gains taxation. If the fund units are sold after 1 year from the date of investment, gains up to 1.25 lakh rupees in a financial year are exempt from tax. Gains above that are taxed at 12.5%, If sold within 1 year, the entire gain is taxed at 20%. Dividend taxation. Dividends are added to the investor's total income and taxed according to their income tax slab. If the annual dividend income exceeds 5,000 rupees or 10,000 rupees after April 2025, a 10% TDS is deducted before distribution. That's all for today. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for updates on upcoming videos and potential multi-bagger stocks. Got a mutual fund scheme in mind that you'd like us to cover next? Drop it in the comments below. In our next video, we'll be reviewing another exciting mutual fund opportunity. Thank you for watching, and we'll see you in the next one.